We're joined now by Mr. Nobuo Tanaka, who's Executive Director at the International Energy Agency in Paris. Thank you very much indeed for joining us. Now, you've just produced your World Energy Outlook for 2007. In fact, it looks forward right the way to 2030, doesn't it?
That's correct.
What is the long-term picture, do you think?
Well, the long-term picture of the oil demand and supply situation is that certainly we focus China and India in this 2007 outlook. And their economic growth is certainly a very good thing for the whole world. But at the same time, they are consuming energy in a very, very substantial way. So certainly we are seeing that the demand is increasing, and that we expect our assumption, and the oil price is moving up.
So your assumption would then be, I'm just trying to get this absolutely straight, that this $100 a barrel mark we've seen is not a blip, not a flash in the pan.
Right. I mean, our current, 2007 average price of oil is about $60, $70, but we expect in our reference scenario, it's move up to 109, and even in very high growth scenario of China, India, it may move up to 150. It's a quite high price level. So certainly the low oil price age may be over, and we are now in the age of very high energy prices.
So would you then disagree with OPEC, which says that this is not fundamentally a supply and demand question? There are these other issues of which you're familiar enough.
Yeah, we are discussing, have a good dialogue with OPEC Secretariat and OPEC countries. Yes, we disagree on that. We focus more on the fundamentals of oil market, and supply-demand situation is a basic determinant to the direction of the price. And certainly the current level of spare capacity or current level of stocks showing that the market is quite fragile, and any small change in the geopolitical risks or weather or extreme weathers may cause a huge jump in the price and the volatility of the market. So, this tight market is certainly sending the signal to the producers that they feel the gap of stock drawdown.
Any thoughts on your part of releasing emergency oil reserves at the moment?
Well, we are not using this strategic stockpile for the high oil prices. We use it when the physical disruption or risk of it may happen. So we are determined to use it when the time comes, but not the simple high oil prices is the case. And what I think this $100 oil price is sending us the signal is that consuming country must do more in energy conservation, energy efficiency, or invest in alternative energy sources. That's the very important message the market is sending to consumers.
Now, of course, you are of the International Energy Agency, not just the oil agency, so I guess technology will help out in terms of oil recovery. But what about alternative energy sources?
Certainly important one is nuclear energy, for example. And certainly there is countries who are starting investing in nuclear more, and there are some reluctance in some other countries. But as a whole, nuclear is a very important option to increase the energy security and at the same time reducing the CO2 emission for the climate change issues. So this is a very important option. Of course, renewable energy investment is very important. But the problem in many countries is that they are not really investing in research and development of these renewable energy sources. That's a serious problem.
All right. Thanks very much indeed for